Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using what we're known for, which is fundamental analysis. If you find this video interesting, kind of looking maybe for more stock tips in the future, be sure to hit that subscribe button below. Today, another popular company. I think we say that every week, but always pretty prevalent in the news. We're going to talk about Foot Locker. And you might not think it's that interesting, but they had a huge fall today after reporting earnings. Got some numbers on that, but I think it could be an opportunity. I haven't looked at the numbers, but huge decline on what I thought was pretty good data.
And Chase, I'm not sure I'm going to pronounce this right or not, but there's a new category they've come up with called Athleisure. It combines athletics with leisure. And I'm just sitting here thinking, my shoes are kind of tight. Maybe I wish I did have a pair of sneakers on that weren't so tight. But it is a new thing because people want to be comfortable. We've kind of like got away from a little bit more of the dressing up, and maybe we want nice shoes to be comfortable in. And Foot Locker has a full array of different things. I've noticed they've done some acquisitions also recently as well.
Yeah, and I mean, as I said, I think you're right. The athleisure trend. I know my fiance will wear like leggings or the kind of like tighter. I think they're called like joggers. I'm not with the fashion trends. And then tennis shoes. And it seems like that's a more and more prevalent in today's society, where even too when we're in the office, a lot less people kind of wear the suit and tie, and they'll wear more comfortable clothing. So I would think Foot Locker's a benefactor of that. And I think the numbers show it, just the stock price didn't reflect that today.
And I still like my suit and tie. Makes me in the business clothes. I like wearing them. So we're not going to be in tennis shoes and jeans or anytime soon. Don't worry about it.
Yeah. We'll still rock the nice clothes, I guess we'll call it. But
business attire.
Yeah. And I want to talk about these numbers with Foot Locker because I'm just appalled. And I say that because they beat on earnings, they beat on sales. Get this, they raised their outlook. And I mean, it wasn't just a small raise. They raised it to an outlook of $7.53 a share to $7.60 a share, which is that kind of range you're looking for. Initially, it was $7 to $7.15. I mean, you're talking about an increase of over 50 cents a share. I mean, that's huge for the expectations going forward. I'm just appalled why the stock price fell.
And we'll look at the numbers here and so forth, but it's just something that they were having the same problem that other people have, and supply issues, labor issues. We're going to get through this. And you buy a company like a Foot Locker. Again, we haven't looked at the numbers yet, so I'm not saying run on buy it yet. But you buy a good business like this when they're having some short-term disabilities and short-term problems, whatever you want to call them, that we believe they could make it through it. So I'm excited to look at these numbers because we may say this could be a buy.
Yeah, and it's interesting. I'm going to look at the sales too, and you look at sales. Comp sales, which is comparing active stores to active stores last year, it was up 2.2% in Q3. But the number I'm very intrigued by is it was 13.3% higher than in 2019 pre-pandemic.
Yeah.
So good numbers there. The other thing I found interesting is the thing that people are saying that kind of took them down today, as you said, was the supply constraints. Well, that's impacting everyone right now. So that's not, really a huge factor. But the thing that I think is interesting is their inventory is actually up quite substantially. And they think they're going to get through the holiday season without really many blips. So the supply chain shouldn't cause that many problems for this company. As you said, it could present a great buying opportunity.
Yeah, I read a little bit of the conference call from the CEO. I didn't do the whole thing, because we don't own this company, but what I saw, I kind of like, and I think this is, again, as we call it, a fixable problem, and not over the next day or two, but months down the road, maybe a year or two. Like, wow, they're doing great again, and we're seeing a lot more too about retail. I will tell you one thing I thought about. I believe a lot of their stores are in malls, but I'm hearing kind of malls reversing around too and being kind of a place to go again.
Yeah, I've seen that as well. That malls are kind of back in fashion, so to speak. Yeah. And I think it's funny. As I said, beat sales, beat earnings, raise guidance, have that good outlook. I guess the only thing you can do in this market right now is buy tech. That's the only solution. The hot tech. That's the only thing that seems to go up at times. And of course, I'm being facetious here. I don't go out and put all your money in tech. We've seen that story end badly before.
Right, and you are paying a high price for that tech. And we all know buy low, sell high. not buy high and hopefully buy higher and higher and higher. I mean, eventually that game does not work. And that's why we're at Foot Locker, trying to find investors watching this, maybe a deal that you can get into that'd be a good business to buy it on sale.
Yeah.
So
So
are we
with
gonna look at the
that,
numbers now? I'm ready.
yeah, I'm ready to look at the numbers here as well. Let's go ahead. Ooh, actually, I almost gave away our portfolio.
Oh,
Because we have
we have
all
to charge
those.
for that if we did that.
We got all the quotes that are pulled up for our companies. I don't want people to see what exactly we hold.
Slow down. Slow down.
We just want to give the numbers for Foot Locker.
Yeah, exactly.
So I'm going to go ahead and pull up just Foot Locker here. Thought I caught that. But while we're kind of sitting here waiting, it is just so funny when you look at these technology companies. They just climb higher and higher and higher. And I worry. You're supposed to buy things when nobody else wants them.
Right.
I don't know many people that dislike these companies. That's where we look at buying things. People dislike Foot Locker right now. Hey, that's when we might like it, So
you make money going against the grain, and
yeah.
you can make money with a momentum for a while, but you just never know when that's going to turn on you and go away. And it's happened back in the nifty 50s, back in the 70s. It happened in the 80s. I mean, it just happens over and over again because nothing is priced to the moon. And we just don't know where, Microsoft or Intel, not Intel, but Cisco, Nvidia. I mean, they keep going.
Cisco's low. Cisco's low.
I didn't mean to mean Cisco. I meant I was not thinking of Cisco, but not Cisco, but I meant Nvidia, Netflix, Microsoft, Apple. These companies and great businesses. I'm not saying they're not good businesses, but what is the top that you paid for them? And keep in mind that the average over the last 100 years is around 14 to 17 times earnings is where they're reasonably priced. And some of those now are at, I think, 30, maybe even 35, way too high.
Yeah, and I didn't want to say you brought up the momentum, and it's funny, you get the momentum up, but you also get the momentum down many times. So you want to make sure you don't start seeing that. But with that, I got the numbers pulled up for Foot Locker. So let's take a closer look, see if this is a good opportunity to buy Foot Locker. Their ticker symbol FL.
Yeah, Florida. So I thought, well, Florida, what's that doing there? So,
yeah.
All right, they on the industry of apparel retail, which again seems to be on fire right now. Short percent of float shares, short here, 5.8%. Nothing too bad there. Surprised at 94.5% of institutional ownership. That's pretty high. We do show here the last report we have for these numbers because new numbers just came out today, July 31st. We will have to update the numbers probably next week to see where they stand now. But look at that PE ratio, 5.2 versus 33. Now, I think that probably, my guess is, could come down even more. I don't know. Well, we'll have to see that. But that means it would take you 5 years to get back what you pay with the stock. That's just a phenomenal PE. Same thing for sales, 0.6 versus 2.3. Price to tangible book value, 1.7 versus 21.2. And price to cash flow, 6.2, better than half the industry of 15.7. Well, and let's look at the PEG ratio, which tells you what you're paying for the future growth of those earnings, 0.2 versus 2.4. Wow, based on these numbers, we got a great value here. Let's see what's going on. Now, the earnings before today's report, they were up 205%, well above the industry growth on those earnings at 83. Even the 5-year rate looking very attractive at a 16% growth on earnings. Wow, versus 14.9. Sales, 1 year change, 15.1, better than the industry at 4.8, and even the 5-year 2.6 versus flat for the industry. Analysts, they're giving a growth rate of 39%, 5-year earnings per share growth rate, very high number. They are giving the industry 54, which is kind of high for me. But wow, and I love this dividend. It's not outrageous, but a 2.4% dividend, and their payout ratio only 7.1%. Tells me that they could actually pay more of this. I see a low 5-year growth rate on those earnings or those dividends at 1.8%. So maybe we could see a little growth on that dividend, get it up to a 3 or 3.5%. Maybe we'll see on that. We do see on the balance sheet here, got a current ratio of 1.9 versus 2, so plenty of liquidity with the business. Debt to equity, 90% versus 120%. That's a big positive. Just some other things here. We want to see days inventory outstanding, 67 versus 93. That is a positive. Net profit margin, wow, 11.7 versus 6.6. Return on equity 30.6 versus 23.1. And even return on capital is good at 16.2 versus 14.8. Chase, I almost feel like while you're going to do these other numbers, I might go put some buys in here because what I'm seeing so far, I like quite a bit.
Well, you have to wait a little bit because it is Friday, so you'll have to wait till Monday. But let's take a look here at the current price for Foot Locker. It is $50.68. I think that includes the fall. Check that on our other source when you switch over to the forward estimates. But 52-week high here, $66.71. 52-week low, $36.94. You can see the year-to-date return still done pretty well, I think, even with the increase at the decrease, as it's up about 27.4%. You're not talking about a small company here, as the market cap is about $5.2 billion. It's not huge by any means, but it's not too small. It's in the middle of the road for us. With that, let's take a look at what's going on going forward. As I said, that 50.68, that is the current price. You can see it was down nearly 12% today. And that's what I mean. I think that was just a huge overreaction for the stock price. And that's generally when we like to look at perhaps buying something as it could have gone too far. Especially, I look at these forward estimates. I mean, this is quite strong. You go out to January 2023, estimated earnings per share of $6.57. That gives you a target sell price of $109.06. You see here the forward PE about 7.7. I mean, that's phenomenal. I mean, you see the earnings growth. I don't like to see this. It is estimated to fall a little bit from 2022, which is their current fiscal year. But still a strong level. And you see their analysts do kind of anticipate that to ramp back up in future years. So, I mean, I like what I'm seeing here with Foot Locker. I think there's a lot of potential upside. And I think you're getting a pretty darn good price for it.
And Chase, is what true investing is about, is buying a good business at a good price. I know you mentioned about the earnings per share falling next year from this year, but I think that's because we had so much pent up demand this year from last year during COVID that this year was an extra high one. But 2022, that's still a good number. I'm not sure it was in 2019 for the earnings, but I do believe it was higher. So we are seeing that in a lot of companies where 2021, the earnings are just phenomenal because you almost combined a year and a half into 1 year for sales. But now next year we'll be back to more to a normal year. But gosh, what a great number. You're not overpaying for this business, not high debt. I don't know what could go wrong with it, but this is the research. If we do buy a business like this, maybe people think, oh, the online is going to do better. But gosh, just this Foot Locker, I mean, what they do too, I believe they consult you when you go in because there's so many different shoes now to buy. It used to be back when I was a young kid, you had like one pair of cons to buy, and that was about it. Now you've got, I want to say hundreds. I don't know, quite a few out there.
I will say just one knock on this company that
Sure.
concerns me is it is not a brand that you sell direct to consumer. That's one thing that has always concerned me. I mean, Nike now, they sell direct to consumer. I'm sure Adidas does as well. Is you do have what I'm going to call looming threats that, you go to that direct to consumer approach as it could be more profitable for those manufacturers. I know we have a retail company in our portfolio where they actually have 90% of their sales that are direct to consumer. I mean, that's the type of business I like. I will say the numbers look good, but one thing to be cognizant of is the fact that they're distributing other people's products.
Chase, my sneakers are getting a little bit worn out, so I think maybe I'll make a visit to a Foot Locker and feel the experience because I think because there's so many options, I don't know what kind of shoe to get. Yeah. That maybe they are really not just salespeople there, but really kind of know the business. Are you a runner? Are you a weightlifter? What is your aerobics? Well, what is your thing that you're doing? That they can kind of match the shoe for you because there's so many options. You really kind of need help to maybe buy what you want. I mean, even Nike has how many different models?
Yeah, I mean, that's a great point because that is one thing. I mean, I don't buy clothes online. I don't really buy shoes online. And at one time I did. They came in and it was the right size, but it was a different brand, so it didn't fit me the same way. So I mean, you are right that the shoes is just another thing I feel that you have to try on. I might be out of the norm on that, but I would be curious if I was looking at Foot Locker, what percentage of sales are done online nowadays versus in person? I feel like this is a product that kind of needs that touch before you buy it. But as I said, I'm not in the fashion world, so I could be missing the boat on that one.
Yep, I agree with this. So I'll be at Foot Locker on Sunday. You want to join me?
Yeah. No, I'm good. I don't need any shoes. I'm good. I don't like to buy things that much. But with that, I hope you guys found this video informational on Foot Locker. Again, if you found it informational, interesting, be sure to subscribe below so you can get updates on our future videos that we post. I'm going to give you a little secret. Next week is Thanksgiving, so we won't be doing one next week, but we will be back the week after that. Again, just as a reminder, this video is for informational purposes only. But again, thank you for the time. And if you want to find out more information about our investment firm, Wilsey Asset Management, be sure to visit our website, smartinvesting2000.com. Again, smartinvesting2000.com. And you got one more point there?
One more point. Enjoy your turkey. Don't buy a turkey.
Yeah,
Turkey stock.
exactly. All right. Have a good one.